Greetings, Shaun Pruitt here, Zacks Equity Strategist, and today I'm going to be discussing whether it's time to buy, hold, or take profits in Euroseas stock. So a few months ago, I highlighted Euroseas as a top transportation stock to buy for higher highs in early June, and even selected the company as my ultimate pick for a stock that was poised to move higher throughout the quarter. And it's very gracious to say that Euroseas stock has delivered, now soaring nearly 70% in the last 3 months and recently hitting a new 52-week peak of $65 a share. However, this certainly begs the question of whether it's still time to buy or hold stock in the well-established shipping container company or take profits. And there you can see that chart of Euroseas, ticker symbol ESEA, soaring nearly 70% in the last 3 months. So first off is Euroseas' operational excellence and higher charter rates. So Euroseas' blazing stock performance has been attributed to its operational excellence, taking advantage of high charter rates, with the company earning $29,420 per day per vessel during Q2. And for broader context here, I believe Euroseas operates more than 20 vessels. So having a solid niche in the feeder and intermediate container ship segment, Euroseas operates on a smaller scale than shipping giants like Maersk, Kirby Corporation, or Matson, but has separated itself from many of its transportation shipping peers through its focus on fleet efficiency, timely investments, and cyclical market opportunities rather than dominating global trade routes. So as a more specialized agile shipping operator, it's noteworthy that 90% of Euroseas' fleet is under profitable long-term charters, with feeder and intermediate container ships being at high demand and short supply. And correlating with such, Euroseas impressively exceeded earnings expectations early in the month, with Q2 EPS at $4.20 compared to estimates of $3.87. And following the impressive Q2 earnings beat, Euroseas' fiscal 2025 EPS estimates have risen 7% in the last 30 days, from projections of $15.47 per share to $16.61, as you can see here. So Euroseas is benefiting from a very positive trend of earnings estimate revisions following that Q2 earnings beat. And in the last year, these revisions have skyrocketed more than 112%. It's also illustrated in this revision chart here. As you can see, going all the way up over 112%. And Euroseas' annual earnings are now expected to increase roughly 12% in fiscal year 25 and are projected to rise another 7% in fiscal year 26 to $17.74 per share, as shown right here. So Euroseas has also been highlighted as a top income stock. So highlighted by Zacks Equity Research for its strong income characteristics, Euroseas has reinforced investor confidence by lifting its quarterly dividend by 7% from 65 cents a share to 70 cents, as illustrated right here. And this also marks Euroseas' second dividend increase. Actually, it came from 60 cents last December. So it's increased its payout quite a bit since implementing a dividend in June of 2022. And more impressive, Euroseas' dividend yield is currently at 4.19%, topping Zacks transportation shipping industry average of 3.74% and towering over the S&P 500's 1.15% average. And obviously, it'll be important to monitor Euroseas' valuation after such a blazing performance in the last 3 months. But despite its magnificent rally, Euroseas stock still trades at just 3.7 times forward earnings, which is intriguingly beneath its industry average of 7.4 times. And a steep discount to the S&P 500's 24.6 times. And the cherry on top is that ESEA also trades under the preferred level of less than 2 times forward sales. So there you can see its forward PE valuation still very attractive in that regard at just 3.7 times forward earnings. So the bottom line is, while it makes sense to take profits in Euroseas stock if needed, ESEA sports a Zacks ranked #1 strong buy at the moment and could still have a nice amount of upside considering its cheap PE valuation and the trend of positive EPS revisions for fiscal year 25. And Euroseas' shareholder-friendly approach has also made its stock desirable to keep in the portfolio in regard to sharing its profitability through a very generous dividend. Again, I'm Shaun Pruitt, Zacks Equity Strategist. I hope you enjoyed this content. For more, please feel free to visit zacks.com/promo.